What was your big takeaway from the IEA and the OPEC report today?
I think you're looking at different time frames. I don't think you can compare like you were just talking about. The IEA's is a medium-term oil market report, and they're talking about the structural issues, which we've been saying for years as well, that we just haven't invested enough. So, you know, we just launching our long-term service today, for instance, and we say a very similar thing, that we actually have a big supply deficit in around 2021, 2022. And even with a lot of shale, that cannot be bridged. But I think what OPEC are talking about is the prompt oversupply, which, you know, you can see prices have corrected very sharply. The US, having talked about no waivers whatsoever for Iran, has suddenly turned up and given a lot of waivers, potentially 1.3 to 1.5 million barrels per day. So that's obviously tilted the market into oversupply, especially as US production continues to grow very strongly as well. So again, you're talking about the short term versus the more medium term over there.
Well, let's take a look at that when it comes to the curve. I mean, if you come inside the Bloomberg, what you're going to see is the curve for Brent, and what you have on the blue is where we were just a month ago, and here is where we are, is the orange, which we are now. The back end of the curve hasn't really moved at all. It's been the front end. So how does that need to reprice to catch up to that supply gap?
Well, again, in some ways, you're saying that that's what the market is reflecting. The back hasn't moved because the market understands that you still need some kind of an anchor price to incentivize investment. Now, whether this price is enough is a different question, also because there are other considerations these days, right? It's electric cars, and shareholders don't necessarily reward companies for investing in conventional oil and gas. But keeping that aside, I think clearly the curve is telling you that there's a prompt oversupply. That's why all three curves have moved into a mild contango, and that's why OPEC will have to take some corrective action when they meet on 6th of December and pull some of the oil that they preempted into the market out of the market, right? This is precisely why you shouldn't be preempting such events, because you just don't know the kind of uncertainty that you're dealing with.
Amrita, how important are the Iran sanctions and, as you point out, the waivers? It used to be that the United States basically had the strategic petroleum reserves as a way of affecting oil price. Has President Trump actually, maybe consciously, developed another way where he can really affect the price of oil by what he does with those waivers?
Oh, completely. I mean, look, if you think about what everybody in the market was expecting, including ourselves, we were very clear that this would result in a bit of an oil price spike, the fact that the US was going to be extremely hard and not really issue Iran with waivers. Now, we didn't expect actual Iranian exports to ever go down to zero. There would always be some buyers and there'd always be some waivers. But we definitely didn't expect 1.3 million barrels per day, if not 1.5. Now, the US hasn't disclosed the exact amount of waivers, so we've obviously had to cobble this together, talking to those importing countries. That, I would say, is at least 500,000 barrels per day more than what we were expecting, and for a lot of other people, it's a lot more. Clearly, when oil prices went above $85, the US panicked and they started giving out waivers. So a choice was between Iran and prices, and they chose prices.
So what's the short-term downside? You mentioned in contango, you look at 1 to 3 month Brent spreads, and you can see that. What's the floor? How long does the downside persist for?
Look, this is like catching a falling knife, so I don't want to go on TV and especially on Bloomberg and say, oh, this is the floor. But can I rule out us testing $60 before the OPEC meeting? No, I can't. Not because it's justified by fundamentals, but because the market is really testing OPEC here, and they want to ensure that OPEC actually takes off those barrels they put in to preempt these Iran sanctions. And I think there is still some downside in this market ahead of that 6th December meeting.
And what role does President Trump play in that? I mean, yesterday he didn't like Saudi Arabia calling that floor at 70. He wanted lower. He went out there on Twitter and basically said it.
Well, I think this is the million-dollar question, and I think this is why trading oil has been very difficult over the last few months, because it hasn't been just about fundamentals. It is about figuring out all these political moves and political preferences. Ultimately, though, for OPEC, what will matter is the oversupply, and they need to have a market that's balanced. They have a long-term outlook. They need to ensure that investment continues. If you have a lot of volatility and a lot of downward pressure on prices now, you're not going to get that investment, exactly what the IEA is talking about. And in a few years' time, you can have a huge spike in oil prices, and OPEC will definitely want to avoid that.